All right, everyone, good evening. Today is Tuesday, September 15th, and we're going to go through the market news flow of the day. Firstly, we'd like to kick off with central bank activity. We see that the Bank of England has announced that they will cut rates to negative 50 basis points in a no-deal Brexit. The risk of leaving without a deal has been heightened, as we've seen by the implied volatility on the sterling options, but also in the real actions that we've seen in Parliament. In addition, we've seen that hard deadline of October 15th stay put, which is becoming closer and closer. The Bank of England is also expected to expand their program, with the British having a likely turbulent end to the year. This could mean more asset purchases. With regard to the Fed tomorrow, we think that they will stay dovish with constant rates until 2023. Chairman Powell will announce their policy statement in an updated press conference tomorrow. They did not unveil a new framework in Jackson Hole, and inflation has been consistently short of their target. At this virtual Jackson Hole conference, they described that they want a 2% target over the entire business cycle rather than at any specific reading. The Fed thought that unemployment would be 9.3% at the end of the year. However, it is already down to 8.4%. A large majority of respondents in a CNBC Fed survey also believe that the Fed will sit tight even if inflation moves above that 2% target. Again, that's not something that we've seen yet, as this inflation has consistently undershot the target. Just over half the respondents of the 37 people surveyed believe that the recession is currently over and actually ended in May. The expected size of the Federal Reserve's balance sheet by the end of asset purchases, which are obviously still continuing through this modified quantitative easing process, is $9.7 trillion. The expected rate hike is in February 2023, with 69% of respondents saying that the recovery is going much faster than they originally forecast. This is in line with the dot plots, which also exude this dovish sentiment. And tomorrow, when Chairman Powell gives his presentation at the press conference, we will also see more dot plots come out of the Federal Reserve's Board of Governors. And that should give us some more clarity on what they themselves think rates are going to look like. Moving on to the Bank of Japan, there is no change to monetary policy for the now former Chief Cabinet Secretary Suga's win to succeed Shinzo Abe. The majority support from the LDP factions, thus having seen victory, is largely priced in, with the USD JPY edging lower in the lower end of the 105 to 107 range bound area that has been trading in for the last few months since early July. And the Bank of Japan's meeting is on September 16th and 17th, so tomorrow and the day following. And they're expected to continue with yield curve control, keeping the 10-year around 0 basis points, and the policy balance rate, which is their equivalent of the federal funds rate, at negative 10 basis points, which continues in the firm's negative interest rate policy. In addition, on the right of your screen, you'll see that the Bahamas is planning an e-currency to connect with far-flung island beaches. This pilot program started in December for the sand dollar currency on the islands of Exuma and Abaco late last year. This will be rolled out nationwide by October 2020, which means we only have a couple more weeks to wait. The monetary authority in the Bahamas has a whoppingly small, mere 48,000 US dollars worth of sand dollars on its balance sheet, valued 1-to-1 with the regular Bahamian dollar, which in turn is valued 1-to-1 pegged with the US dollar, the greenback. In addition, please don't get too excited and think it's some crazy cryptocurrency experiment. Payment service providers, those facilitating the transactions, just have an easier time if they use the sand dollar, which is something that you see in remote islands that are pretty tourism dependent. To look to the chart on your left, I'd like to talk about Germany. The German DAX is down 3% for 2020, lagging the S&P 500's 3% gain since the start of the year, but performing far better than the European peers. The French and Italian indices are down 16%, while the UK's FTSE 100 is off 20%, and Spain's IBEX 35 has slid a little bit over 27% this year. Investors have said that German shares were piggybacking on China's economic recovery, which makes sense because exports from China accounted for about 47% of Germany's GDP, compared to 33%, which is the average for high-income nations. Just to move on to the next slide, I'd like to talk about a couple stories of the day. On the right-hand side, you can see market movements, which were pretty muted across the board. CIFIS also met on TikTok with a September 20th deadline for the administration, still holding in place as two reviews from both Trump directly and different members of the administration, including the CIFIS board, to occur this week. Mnuchin is also involved in this process as the Secretary of the Treasury. On the top left of your screen, you'll see the Citigroup credit card asset-backed securities. Citigroup saw the biggest increase in card write-off rates in August, and 30-day delinquencies fell to a mere 113 basis points from 125 basis points 3 months prior, benefiting holders of consumer asset-backed securities and indicating a stronger consumer across both subprime and more creditworthy customers. British oil merger talks have continued with Premier Oil and Chrysler Holdings having preliminary talks with a potential deal. Two largest oil producers in the UK are likely to require a lot of government intervention as they go through this process. This follows some preliminary interest between the chairman of UBS and Credit Suisse. So, coming out of merger mania yesterday, where we had a whopping $69 billion of deals announced in 2 days, we see that deals can continue and deal flow is likely to continue to pick up. Considering DraftKings and ESPN, they have announced a deal with ESPN to become the only exclusive provider of daily fantasy sports and also becoming the co-exclusive provider of gambling services. Deal terms were not disclosed, but DraftKings will become fully integrated into ESPN programs and studio shows. DraftKings share price rose 17% on the news yesterday and is now up over 160% since it IPO'd through a SPAC in April. And I guess, given the current market volatility, SPACs have become incredibly popular and a great way for companies to merge and become public quicker. This comes less than 2 weeks after DraftKings has landed Michael Jordan as a special advisor to the board. Lots of interesting things to watch there. Moving on to the big stories, we'd like to talk about the U.S.-China relations. The U.S. has apparently violated trade rules by unfairly imposing tariffs, according to the World Trade Organization, the WTO. The WTO only looked at the United States and not China's retaliations, but considering the events and actions that the Trump administration has put into play, it seems that the U.S. will appeal the ruling, but the United States has also blocked the appointment of judges to the appellate body. So the WTO actually does not have enough judges to hear it from having cases. $200 billion of tariffs were deemed illegal by the WTO's 3-leader panel, and this means that the tariffs were against World Trade Organization laws and international protocol because they applied only and exclusively to China as a result of intellectual property concerns, and were actually above the maximum rates that had been agreed to. And considering a secondary issue between the U.S. and China, the cotton exports out of Xinjiang have raised concerns over the budding humanitarian crisis. The current Secretary of the Department of Homeland Security, Ken Cuccinelli, had called this the modern-day form of slavery, which are pretty tough words to use. With this in mind, the U.S. has decided that they will block some exports from this Xinjiang region of China because of the crisis over the Muslim minority, the Weiwu Arzu people of China, which are dubbed in English as Uyghur. This is a Muslim minority that has been subjected to a lot of brutality throughout China, but particularly in this region that is known for its textile and cotton production. Obviously, as any sort of tariff would do, this is going to raise prices for American consumers. However, given the dire nature of the humanitarian crisis, it does make sense to pursue this route. Considering Israel and the Arab nations of the UAE and Bahrain, Trump brokered deals in the United States on the South Lawn of the White House, which Trump dubbed as a diplomatic breakthrough. This established that the people of the Middle East would no longer allow hatred of Israel to be fomented as an excuse for either radicalism or extremism. But the Palestinian prime minister took a page out of Trump's book by actually using Twitter to oppose the deal, saying that it erodes the unity between the Arab states, inferring that it could undermine the 2002 Arab Peace Initiative. Officials also did not either wear masks or maintain any sort of distance on the South Lawn, which is in direct opposition to the DC restrictions. Considering the state of Indian trade, we've seen that the deficit, which is the difference between imports and exports, widening further to 6.77 billion US dollars. Imports and exports, however, did both fall, with imports falling 26% and exports falling about 13%. This compares to a trade deficit of $4.83 billion in July. Particularly affected sectors on the export side were negative growth across petroleum, with petroleum exports down 40%, jewelry exports down 43%, leather down 17%, and textiles down 14%. And considering positive growth, we looked at exports of rice, coffee, tobacco, iron ore, meat, and poultry, all displaying very strong characteristics and resilience there. Considering, however, that both imports and exports are falling, we see weakening consumers in both India in particular and also in the world as a whole. Just to summarize and touch on a couple of events from yesterday, we saw the Dow, S&P, and NASDAQ all up between 1 and 2%, with a little bit more than modest gains. We see the Dow nearing a 28,000 point mark, and the S&P 500 around the 3380 range. Considering the 10-year, we see that trading around 68 basis points. Looking up on my screen right now, we see that Asia is mostly steady, slight modest gains out there. We see a slight rally in oil futures across Brent and WTI, but nothing to write home about. We see that things are pretty flat, and the biggest thing that the market is watching going into tomorrow is definitely the speech for Chairman Powell. So that'll come out tomorrow afternoon. Highly recommend you guys tune in. I think it would be an absolutely wonderful learning experience. As always, look forward to seeing you Thursday on September 17th. Thank you so much for taking the time to listen, and if you have any questions, please do reach out.